But let's get to the PF segment then, or the personal finance query segment. Harsh Roongta of apnapaisa.com joins in to take us through a couple of queries. And let's get to our first caller. Ranjan Kumar Singh calls in from Patna. Ranjan?
Yes, ma'am.
Hi, what's your query?
Ma'am, actually, I want to invest from 4,000 rupees per month for my children for 15 years and 20 years time duration. Where I have to invest this money?
Okay, what are your current investments? Do you already have a portfolio of investments?
Ma'am, mostly are in debt funds, ma'am. They are invested by my father, not by me. I want to invest for my children.
Okay, and what would be the quantum of this?
Approx 20 lakhs for 15 years and 25 lakhs for 20 years.
Okay, and just quickly then, your investment target would be how much again, if you could just repeat that?
For 4,000 rupees per month.
Okay, all right. Harsh, what would you recommend to Ranjan? He basically, I also understand, is the only earning member at this point in time. He has 3 dependents and he would like to invest around 4,000 rupees monthly, and the time period would be 20 years. He already has a bit of investments in debt only.
So Ranjan, this goal figures that you gave us, 20 lakhs and 25 lakhs, are these figures of today? I mean, is this the money that you would need if your children were to be educated today? Or is this the money you need 20 years from now? What is, how have you arrived at that goal?
20 years from now.
So you know, just to put that in perspective, the figures that you gave, roughly about 40 lakhs in 20 years, is roughly just 9 lakhs today. So I mean, as long as that is what you are aiming at, that if you had 9 lakhs and if your child, both your children were old enough to get that higher education, then the goal that you have set for yourself is okay. In which case this 4,000 rupees that you have, and since you already have a large investment in debt, maybe through your father, but as a family you're fairly invested in debt, I think investment in equity is clearly something which is advisable. You can put as much as 90% of that money through a systematic investment plan into equity fund. You could continuously seek advice to see which funds you want to invest in. Today, if you want to invest in, you could do it in Franklin India Blue Chip Fund or a DSP BlackRock Top 100. If you can't keep track, if you can't keep reviewing your investments, then maybe a Nifty index fund, a Franklin India Index Nifty fund is also good enough, though the returns so far on an index fund as compared to large cap funds haven't been as good. But that prevents you from having to keep track of what is happening on your equity funds. Clearly, with the number of dependents you have, your life insurance and health insurance is something. Please take care. I think you have indicated that you have some life insurance, but that appears to be extremely expensive. So review that. Take an online plan. Very rough, 10 times your annual income should be your term insurance at least. And that if you buy online, I'm sure within the premium that you're already paying, you will get substantially higher term cover. Please look at health cover as well. 3 lakhs for each of you and people dependent on you, including your parents if they are dependent on you, plus a top-up cover. Insurance is extremely important to protect your investments, simply because if something happens, then all your investment plans will go for a toss.
Okay, that's an exhaustive and comprehensive, detailed plans for you, Ranjan. We'll take a break on that note. We have more callers lined up. We'll come back in a jiffy. Welcome back. Do we really need to update? The markets have not done much at all. It is in individual stocks that there are pockets of activity. Geodesic active because of the share of The SKS Microfinance continuing to keep its flag flying high. There is Kingfisher, which along with the other UB Group stocks has been up and about in anticipation of some kind of share interest coming in from some investor. Amara Raja, Sudarshan just spoke about it. That stock has been very good after its results performance. Actually, in the same category, Exide also has done very well. So most of them are news-related stocks that are moving. On a market level, people are not really terribly active today on an index level. We are back to personal finance questions. Sandeep Agarwal joins us from Nellore in Andhra Pradesh. Yes, Sandeep, your question?
Good afternoon, madam.
Good afternoon, yes.
Madam, I want to invest 1 lakh rupees annually.
Yeah, you want to?
Well, I invest 1 lakh rupees annually.
Okay.
And expecting maximum return. So can you suggest me the best, which is the best keeping long?
Maximum return over how many years?
Minimum 1 year, madam.
1 year?
Yeah, 1 to 2 years.
Well, over 1 year, 1 lakh sum will yield an FD return. But if you can give us a more specific time period, 1 to 3 is also pretty long. When will you likely need the money? Because you told us you need 10 lakhs for children's education. How old are your children? Will you need the money in a year?
They need after 10 years.
You need it after 10 years?
Yeah.
Okay, that's a substantial period of time, and that puts a very different color. Money needed in 1 year and money needed in 10 years is different. So we will assume your question is that you are giving 1 lakh upfront now, not systematically, only now, and you want to know what you can get in 10 years, correct?
Yes.
You don't plan to put in money every year?
No.
Okay, go ahead. Harsh, all yours.
So I think there's a completely different complexion. I mean, if you were going to invest only for a year, I mean, obviously fixed deposits or a fixed maturity plan kind of a thing would have been advisable. But now that you have indicated that you can keep this money for 10 years and that you really need it for 10 years, although you can invest it only one time lump sum. So once you have a 10-year horizon, obviously equity comes into play. Depending on your other assets, I think you have other investments as well. We could advise between a balanced fund or an equity fund. I think 10 years is long enough for you to take a fairly large exposure on equity. I would suggest that you put this in a liquid fund and through a systematic transfer plan. Don't do this one shot lump sum investment in an equity fund. Maybe over 24 months or maybe over 12 months, transfer this either into a balanced fund or into a large cap fund. A balanced fund could be an HDFC Prudence or a Reliance regular saving balanced fund. If it's a large cap fund you are looking at, it could be a Franklin blue chip or a DSP BlackRock top 100 or an HDFC equity. Pick one. I think the amount is not large enough for you to do more than one. So just pick one, put it in a liquid fund and systematically transfer it over 24 months into one of these funds that I spoke about. And do a review of your existing investments as well.
Okay, that's the call coming in on that query. But do remember that if you have any personal finance queries, you can send us an SMS. Just type YM followed by a space and your question and send it to 51818, or you can also email your queries to yourmoney@network18online.com. All right, just a quick word on the markets because we're waiting by for the European markets to open. It's possibly going to be another lackluster session because volumes are very low in terms of participation in the European markets, considering that it is holiday season in August there. So we'll wait by for the European markets to open. Just to put things into perspective, however, the Asian markets, besides the Shanghai, that is basically the Chinese markets as well as the Hang Seng markets, had a pretty good session. The Nikkei was up around 1.88%. So we'll wait by for the European markets to open, but don't expect much in terms of fireworks from the European markets, considering that there is lackluster amount of economic data and participation at this point in time. We'll wait by for the live rates to come in at this point, but do remember that there was a bit of risk off on the euro as well, because the euro had touched levels of around 1.238 in a previous session on Tuesday, but that basically came off to levels of around 1.22. So there was a bit of risk off which took place in terms of the European markets. But waiting by currently for the European markets in terms of rates at this point in time. So that's the rate, absolutely flat at this point for the FTSE. The CAC and the DAX should show up in a couple of minutes as well as the peripheral markets. Just to put things into perspective, in the past 1 month also, the European markets have seen quite a bumper session. They've gained anywhere between 3 to 5 odd percent. The IBEX, for example, was up around 5 odd percent in the past month. The DAX was up around 3 odd. So it's pretty much in consolidatory mode at this point. The FTSE up around 0.2%, the CAC 2, which is up around 0.2%. Just to summarize, it's a flattish opening at this point in time. We'll wait by and see, let the rates settle down and get you more global perspective at this point. For our markets also, we are absolutely flat, lackluster in terms of volumes as well. 74,000 crores is what we've done. So we'll take a break and we'll get more perspective on the global front and what we can expect possibly from the US Fed and any other amount of macro data that we're expecting. Hans Goetti of Finaport will join in on the other side.